Greetings, market rebels. Welcome to this week's sector situation video. I'm Wayne. My partner Ryan's working on the market outlook for the week, which will be coming out later today. It is Sunday, December 4th, 2022, and we're a little bit after 2 p.m. here on the East Coast. Let's see if we can get a couple of key slides flashed. Let's see if we can get a couple. There it is. There's our trusty disclaimer for you to peruse quickly, and then let's take a look at our trusty intellectual property rights notice. And if that's that, and I think it is, then we're good to go. So let me get, well, I thought I was here. That's where I thought I was. So giving us the old S&P 12 sector view that we look at consistently here in sector situation. The general take from macro measure that I just recorded, my general take is that you've got to start being really a little bit more careful, I think, if you've been a bull, because certain things are starting to get a little bit frothy. I don't think it's super frothy, but it certainly could be conditions that precede some kind of a pullback. I think a nice little shallow pullback would be good for bulls, but they're not always apt to do what's best for them. Sometimes they just simply press it. But that's kind of where we are. I don't have a strong lean other than I'm going to give bulls the benefit of the doubt until support gets cracked, and it hasn't. So that's really where I'm at. And of course, that would change if things became really overbought, but I don't think they're quite there yet on a macro basis. But in some areas, they kind of are, right? And that's what we're looking at here. We're looking at all the sectors, and staples are up there. You can see the 70.48 reading on the RSI, XLI just below 70, just below 70 on the XLB. These are areas we've been noting that they've been strong for a while. Utilities have been strong for a while. Healthcare, XLV, has been strong for a while. So these have been some of your stronger areas, and that's the old paradox about buying low and selling high, is that really you're probably should be buying strength, right, and selling higher. And that's the thing. The sectors that have been strong just remain that way until they lose, they break down below some form of support, and they just really haven't done that. So that's kudos to them, I guess, but I'm not really looking for a big long run right now, where, not to say that it can't go up, but I don't like the idea that I'm getting in right at a near 70 RSI reading if I'm going to get in now. And I'm getting in now. Like, where was I? What was I paying attention to? Why wasn't I in this from an earlier stage when it was showing this breakout right here, for example, and then pulling back, touching it, respecting it, going big the other way, and then generally working its way up pretty solidly. So that's my thoughts on in terms of like when you show up, do you still trade? I mean, I would still trade it as a bull. It's just that I wouldn't be letting them have a lot of rope to hang me with, right? That the bears, because I'm really at overbought status on the RSI. So just to look at it that simply. But if we look at it, right, we already talked about the strong areas. Areas that really haven't gone, right, would definitely be the XLY. And I talked about that recently, where it wouldn't take much to push through, but it just can't do it yet. It just can't do it yet. So that's not really all that great. XLRE, another one. I think it's understandable with what's happening with rates and so on and so forth, and layoffs, and the housing market and all that type of stuff. It's understandable why this is maybe lagging behind some of the other sectors, but none of these really, right? They're still more or less making higher highs and higher lows, and so almost every sector remains in an uptrend. Financials were doing better, and they've kind of stumbled a little bit. The last few weeks, we have effectively gone down, we've gone up, but we are not really all that much different than where we were a few weeks ago. So you could say, well, this is an interesting consolidation near former highs in here. Maybe we should go in there for a breakout. I can't argue with you. I mean, if they push it through the highs, right, I would just keep it on a short leash. My stop is not going to be down 30%. I'm going to be tighter on that. So that's just the way I handle it. If I'm getting in late stage can still go. You can still get pops. So you can't say no, I simply won't trade it. Well, you can say that, but you might be missing on a lot of opportunity. And that's why I always harp on the discipline, because if you can train yourself to be that disciplined, that that you will not talk yourself out of the stop level you've selected, that you will definitely be disciplined, that lets you get involved in things that are at advanced stages and still keep going a lot more easily, right? Than that that you'll get out, you won't take the big beating. Hey, I tried, it didn't work, I'm out, right? That's one of the critical things. It's kind of paradoxical how the discipline can be freeing, to use a word at least. But look at technology. I mean, the technology made a nice little move, made a new high, had a new closing high there versus the prior high that we had seen. So that's pretty solid, right? The tech's doing that. And I noted in macro measure how if a lot of the big names finally get going, which they haven't, that's what could turbo boost the market through maybe the end of the year, is if they get the Apples, the Microsofts, et cetera, right? If they get those rolling, that could really be something, right? It would be probably melt up at that point. You'd have a lot of some vertical stuff and just day after day relentless buying. But overall, right, energy, I want to note energy to me is possibly making a rounding top here. We've been watching the oil future against here. We've been thinking that something's got to give. Either oil futures need to start lifting towards where the stocks are, or the stocks have gotten ahead of themselves. They need to come back in line towards where the oil future is. All things considered lightly, right? Without going into heavy duty sector analysis in the energy space. That's not my forte. But overall, that's just the general take. And so I would be careful in there, because you could see somewhere maybe around 88-ish, it starts to get a little scary, and there's gaps that can be filled, and right, things happen in a hurry. And I do still think this space is overcrowded. We talked about XLK, communications, even with probably Meadow gave that a big lift. Communications are making a strong move. So there's some of the laggard sectors are starting to kick in. Transports, though, is not one of them, XTN. So, again, an important sector in my mind, along with XLF, but they're kind of stalling out there. I don't see anything spectacular at the moment. Set your alerts near the closest high, be ready to go. And if they draw yourself a nice little support line in here, which we can do just as an example, and get ready to put a nice little alert in there right about there, looks good to me. So I would say, look, given that dropping below that support line is here, it is what it is. But I would say, look, it's obvious then that probably 72-ish is a big level in there. So you might have to wait a while, but that's 72 getting violated and closed below, if the move is fresh, is would not be a good thing in my mind. But excuse me, XLV overbought, where we talked about it. We talked about actually all of these. So then I can go bigger now with a bigger chart on a couple things that might be worth us checking into a little bit. And of course, what we like to do is take a look at SMH, semis, and that's an important space, obviously. And they're right at the 200-day, right? That purple line there is the 200-day. They're right there. They're respecting it, right? And you can see that, excuse me, respected it here, pushed through on the third try, tried to hold above, did for one day, and then gap lower, but then came right back up to it. So if it takes that out, takes that high out, I think there's no reason why it can't get up towards your Bollinger Bands, which have put it somewhere near these highs, upper Bollinger and those highs, which just for the record is about 247. So that would be a pretty nice move if they manage to bust it out. If they break it down, I think it's pretty close to being near the 20-day, but the 20-day will move up more rapidly. So, excuse me, I'd probably say the 150-day in Russ color is your big level to look for, near to about 214-ish. right now. So it breaks there. Yeah, the 100's right below there by a little bit, but you can't wait forever if you're going to short something against what's been an intermediate length or duration uptrend at this point. So I would be interested in that there, but we'll have to see if it does that, if we what we do with it at the time, see what the overall status of all the technicals are once we get to that point, should we get to that point. But overall, I mean, I look at this, and I always mention watching a lot of different things, and where's my chart at there? This should be, no, looks like Thinkorswim moved some of my charts on me, but with a nice little push here, the bulls would be in control of a lot of the time cycles in my mind. So at least the way that I look at it. So if they're in control of a lot of that with just a little bit more push, I think they could be. So that's a big sector, and that would really probably leave some folks scratching their heads. But good, right? This good run from here to there, holding on to most of the gains, slightly higher low here, slightly higher high. So it's showing some signs there. And in terms of RSI, it's at 60. So it's starting to approach overbought, but just not there yet. If we look down here to kind of do possible divergence views, maybe there's a little bit of divergence happening, right? So again, that makes it tough. That's what I came across a lot, trying to say, how do we handle this week? And for a summary, and I think we handle it carefully. I just don't see, I think you have to be ready for both sides. And again, the bigger weeks probably next week, when the Fed and I think there's other bigger numbers that come out along with the Fed next week, but which means right on, without news, maybe they use this to kind of churn, digest these gains they've had, and try to get ready for the next leg up, which they'd like to spring on us, but maybe they just want to wait a little while so it's not stale. Get that fresh buying started mid-month, like the seasonality shows that it typically occurs at. Another one we look at is the home builders, XHB. Should look a lot like probably the real estate XLRE, and it kind of does. But this is I think the good thing to point out here to me is this is the danger of trading according to the latest economic data, and it just hasn't been good really for home builders. But you can see that they're certainly in a much better position than they were here at the very start of December relative to where they were only about 6 weeks ago. They're in a much better, the stock, I should say the ETF's in a much better place technically. And that's, in the face of a lot of negative stuff. So again, I give them their due. And if they start making a new closing high, there's possibilities, right? That they take this up and get it towards, the upper Bollinger bit, which puts it near there. But for now, I think the first order of business would be, if it can't hold the 200 there in purple, right on its really third attempt, first time through, second time through, and then third time through, that would be a big deal, right? That might even be something that would be brought on by overall real shift in the market. But if it can't hold it the third time, yeah, I think you'd have to start calling it into question there. But until it's above every SMA right now. And the short-term ones are all upsloping. So you can see the buying kind of picked up there, a couple of indecisive days with low volume. And then Wednesday, Thursday, the gang really stepped it up a little bit there. Closed kind of faintly there on Friday. Let's look at XAU. This sector's been perking up. We've been talking about that for a while, that it finally started looking a little promising a few weeks ago after going through all this kind of digestive process consolidation, pretty healthy. And then they started showing us some signs, and we were noticing those. And so I put a few more ideas in here and there, not too many. We haven't had a ton of UOA there in the miners, but there's been a few things, and they've been working out pretty well on the bull side, I think, overall. So You got to like what's happening here if you're a bull in terms of getting above the 200 day, and just be on guard if it can't hold right that level. That would be a little bit of a disappointment to say the least. But if it keeps going, yeah, I'd keep going with it and I would expect it to get to this breakdown point of about 132 if they're able to keep the rally going. So maybe there's maybe there's another 7 or 8 points there, which is not a bad little finish, probably about what we're talking about in the market itself for the year. But overall, I think that looks pretty good. I think the bulls are at least at the moment, they're still in control. They worked their way in coyly during this consolidation, and they're cleverly, and now they're in control, and we'll see. But I mean, overall, other than maybe this thing got a little bit short term overbought, it's getting near 70. Other than that, you have to like the price action that it's been tracing out. So maybe we see a little pullback here, and that would probably be a good thing if it pulled back and then went through on the second attempt above the 200 day to take out those highs from Thursday, excuse me, and Friday. We also take a look at, let's take a look at oil, and that had a little bit of life come into it in the week. It finished a little bit on the weak side, but at least that's something. So oil's turning the corner a little bit. It's better than it has been. Got outside the Bollinger Bands. We've talked about this many times. Get outside the Bollingers. Worth keeping your eye on for a quick reversal trade. In my book, you can see it consistently pretty much all past few months, right? You get down there, they work it back in. Get down, they work it back into the bands, work it back in to different degrees of success. You could have been a counter trend trading bull there if you noticed the reversals and got involved. But look, got stopped at the 20. The 20 is not chopped liver. I would say if it doesn't go above the 20, it clearly won't take out that high. If it doesn't take out that high, you've got a primary trend that's down, and you've got a short-term or intermediate-term trend that's also down. So I would still keep thinking down until this high gets taken out on a closing basis. Then maybe we've got a little bit more of a chance to get up towards the 100 there in white. But I do think some bullish news may have already come out over the weekend for the oil market. So go ahead and see if you can dig something up. I'm pretty sure I came across some relatively bullish news there. LB, we've been taking a look at the lumber futures, excuse me, and these are just looking awful. I don't remember if I had a chance to talk about this on Cocktail. I wanted to, but I had some technical issues. But they're making a new low, and to me, this is just not good. I mean, this is just not good. I don't think that bodes well. So for the macro situation and for the home builders, but again, they can ignore things for a lot longer than most people would expect them to be able to do. And so you just got to be careful when still got to use your smart timing when you're timing your bearish entry into the home builders. If they roll, I would wait for them to roll over. But I mean, should they keep going lower? I think so. I think it's been a really serious correction. I mean, a really serious correction in the real world out there. I thought we had. Oh, okay, yeah, we do have it. So here we're taking a look at copper, and this is finally looking. You can see that's looking better. So it's got a little bit of a nice little scallop situation there, and it's working its way up. So again, I think there's some switch me over to percentages. I'm probably going along for a while that way and didn't even realize because I'm focusing on levels of moving averages or highs and lows. But I think your four numbers, clearly the big deal, right? You got to get above 4. You get above 4, and then maybe you're breaking out and going up. So maybe that is a good sign. The volume certainly seems like it picked up and supported that bullish move fairly well, right? It wasn't complete hokum, complete farce. So we'll see, but give them the benefit of the doubt. Got the higher high in, higher low in, and they've got the higher high that took these former highs out. So the pressure is now on, but if they exceed that high there and continue to go, right, then you start thinking about where does this get back to? Clearly, we'd have flat lines, but again, my eye always shifts towards the breakdown level, and that would be back towards four. I think I'll ballpark it at 440-ish. Which again, I don't think a lot of you are trading this, but I'm just saying that's where I would put it at, and that would be a pretty impressive move. And I'm not worried about the Bollingers here because look how they narrowed, right? They became fairly narrow. So breaking out of narrow Bollingers doesn't concern me as much as it does when you have wide Bollingers and you're down here. Like that to me is very oversold, something I'd want to potentially trade for a reversal. Whereas this to me is not the same case because you haven't had this massive move that precedes this Bollinger Band excursion. So just wanted to clear that up for folks. Trying to think if there's anything else I can take a quick look at. I don't think there is. I think I might just close on the SPY just to kind of reiterate if you didn't catch macro measure or cocktail hour. Okay, there it is. That we're coming up into an area that we've been waiting for a while that we thought probably has a shot to get there, and it turned out that they finally did get it there, got above the 200 there in purple. They're into our little semi-transparent box there where there's resistance, different lines that I've got in there that I believe in. There's also a fib up here that would be like another kind of like retrace level it would work its way up to. Probably could put a bunch of fib projections on this as well. You get the idea, but I'm thinking if they are able to continue to pull this off and push it, I'm thinking that the natural place is up towards this upper Bollinger near 429. That is back here towards where there's these little gaps that are kind of were made. Now, one of them came close to getting close. This one came close to getting closed, but they weren't able to. And this little one, I don't think did either. 425.50. Yeah, just they're kind of like little sort of hidden, almost like hidden gaps. They're not really that glaring. You have to really look at the low versus the high and so on. But that would be the general vicinity that I think would be reasonable for them to push. And that's a pretty decent move. I mean, that's another 5% higher from here. And then maybe even 6%. Could they do that? And I'm going to say they could. I'm not calling for it. All I'm saying is with the inverted compound head and shoulders ish type price action in here, the seasonality being what it is, the intermediate term uptrend, the upsloping short-term SMAs, the natural desire to make their bonus checks as big as possible, that whole routine and then some, that they have a lot to fight their way through, but they've done it before. I would say that I'm going to give them the benefit of the doubt until, and we settled on the 20 SMA there in blue. That would be the first sign of a real problem. If they can't hold that, they're below our support line. There's still other pretty stout SMA support levels just below there, but you've got to pick something. You don't want to pick something too far away, but if it starts cracking there, then I'd start getting a little worried. But I think for now, in front of the Fed next week, which is likely to really determine that final 2 weeks of the year and how things behave, I would say be ready for a lot. Be ready for some pullbacks potentially, or attempts to goose a little bit more and then a pullback. Be ready for that because I think some sectors are just overbought. You got to keep those on a shorter leash. If the rotation kicks in and they start putting more money into sectors that are lagging the leading sectors right now, that would be a good sign. And if they start to, of course, move the Apples, the Microsofts, the Amazons, the Googles, the Berkshires, the other bigger ticket stocks in terms of market cap, that of course would really give them what they need if they really want to goose this market back up. And if you get those stocks, some of those stocks at least working, Meta got started and there's a nice gap there we talked about on cocktail hour. Meta, that's not switching over for some reason there. Yeah, I mean, we have a vertical spread on until the end of the year in UOA Pro based upon, well, UOA clearly based upon the chart potentially breaking out, which it finally did. And then naturally we're focusing on this gap closure. So that's getting close to maybe working out, and hopefully for folks that have that vertical on, that'll be great. If it does, it'll get them close to, not at max, but a nice little profit, I think. If it gets to there, I mean, and the market does the 6%, 5-6% jam, clearly we can get outperformance here. I mean, I would ballpark what can be done in here as, let me just check out something real quick. 21. I would say 130 is completely reasonable. That's really a reasonable number for this to get to. And if it outperforms, I definitely think that the 100, which would probably end up drifting down towards 138. And I think we have the 120, 140 on potentially, as long as the stock's above the trigger and working. So, but this is what I'm thinking. If they get the other big names, Met is not nearly as big as it used to be, but if they get the other big names going, that always helps tremendously. And that's how they could really make the indices sing into year's end, is just by igniting rallies in the big dog stocks that we talked about. So again, I think it's prudent to keep your eyes on those. The VIX and some of the other stuff that we look at, that all has yet to really show any signs of reversing right out of the negative spiral that the VIX has been in. So until we see something, like I said, my message is give the bulls the benefit of the doubt unless they push their luck a little too far, too fast this upcoming week. Probably be better for them to get a little bit of a pullback and then try to rally again. Kind of treading water would be good for them all the way until the Fed just give a little bit back and hold things, and then use the Fed. Probably, my guess at this moment, which it could change, but my guess is they try to spin whatever happens with the Fed positively. And just the way Powell's sounding, maybe they're right to do that. I don't know. I really don't know. So, but I'm going to give the bulls the benefit of the doubt until support gets cracked, and they haven't done that. And we see nothing but attempts to really make higher lows and higher highs at the moment. So wait for them to show you something of that maybe the reversal's coming before you fight the trend, or just sit on your hands until that happens. So you don't always have to have a trade on. But anyway, I hope something I've been able to share here this day helps you in the upcoming week or sometime in the future. And I'll see everybody through updates and webinars and so on and so forth. Thanks for tuning in.